Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Happy Monday, traders. This is just a quick, or I hope it's going to be a quick video. Maybe it's not, but maybe it is. This is going to be a video that I want to talk about two different things in the markets I want to help you out with right now. If you watched my previous video based on why I think there's more downside to come right now, it could last. It might not happen straight away. We may have a couple of sideways days, but what I'm looking at the charts, I do see there's probably likely to see a bit more down. There's probably more downside to come. Now, whether that lasts for a few days or maybe a week or so, I don't know. No one knows, right? But what I want to talk about, you probably saw the title of this video, is that the plunge protection team will not stop a market downturn. Okay, you've got to look at the facts. What it is. People say, "Oh, the plunge protection team came in today." All right, I'm gonna hold off that whiplashing, and then I'm gonna go to my second part, which is it's so important to look at the market as in with volume analysis. Volume analysis really does give you a really good insight to what's really going on in the markets. And man, my throat is croaky today. I'm coming off a big weekend myself, so I'm ready to get back in the markets. Oh man, I don't normally get sick, but now I'm getting pretty down there. But that's okay. I'll head off to the gym and then I'll run it out. So the first thing I want to talk about is the plunge protection team. Okay, now the plunge protection team. Okay, let's just talk this reality. Some people say like they look at one day, right? So let's just say, for example, let's bring up a candlestick chart here. Okay, let's open this right up a bit, and let's just say, for example, we're looking at this day here. This is what people think. And I'm just like, right? And I'm laughing because I used to think like this. See this day here? This is like this hammer, look, this little hammer. If you're not familiar with candlesticks, don't worry about it. But see how the market, the sellers came in all the way, and they came all the way back around up. They would say the plunge protection team came in today. No, the market, the buyers came in today, not the plunge protection team. And they think, they say, well, the plunge protection team is likely to come back into this market, and the plunge protection team is not going to let this market fall. You know, the plunge protection team is not going to let this market crash. And okay, if you think like that, again, like if you think like that, one thing that's so important to your life is to be observant. Okay, I went out with an old friend of mine yesterday, and we're laying down on the grass, just looking at the sun, and I was saying to her she was saying to me that one thing that I really adore about you, John, is that you always question everything. Okay, so that's what I want you to do with my videos. Don't take what I say. I have a disclaimer at the start of this video because what's right for me may not be right for you, but there are some truths and fundamental truths about the markets that is right for everyone. And that is, look at the facts for what something really is. Don't take something on face value. Well, the plunge protection team came in, whole bunch of bollocks, right? And then when someone says that to me, okay, like they did recently on my video, I said, yeah, just like they did back late last year. Lol. Do you know what I'm saying? It's like, you know, and it's like, yeah, just like they did right back here when we had this big massive sell-off in February last year. You know what I'm saying? It's like, yeah, just like they did here. It's like, no guys, no, there's not. Please stop thinking that there's this entity out there that's going to stop the market from going down on one particular day or a period of time. It's just not. The market goes in cycles, okay? If you look at the market as in a monthly cycle here, and let me bring up the S&P 500. Look at this, right? The market goes in cycles, you know, and you can see even on a monthly basis, right? We go through pullbacks, we go through whipsaws, we go through all this sort of stuff. It's normal, even if we got a 10% pullback or 15% pullback right now, that's not a crash. Now remember, guys, please remember this, okay? A crash happens. A crash in technical terms, when you think crash, you think big one down day. Let me ask you a question. Ever since we look at all this chart here, right? Back since the 1980s. When on this chart have we had just one big red down bar? And this is a monthly chart, by the way. Probably the only time we had it was back here in 1987, right here, 1987. But let me ask you a question. If you were looking at this chart back here at 1987 and before this big red bar, Okay, let's just look at this here. Would you say that this has been going up a lot? If you've been watching my videos for the last week, you know that I talked about this, right? When the market goes for a nice extended run, that's when you need to be cautious about a pullback, right? We were going for a big run, right? So as you can see, we went from a run from here up to here, which was what? Basically 190%. Nice big run for many years. And actually from here to here was basically 120%. And then what happened? If you look at the charts for what it really is, then we had what? We just had a pullback. Now, this pullback, what was what? The 1987 crash. Oh my goodness, it crashed. It crashed. Oh no, it's so bad. And then guess what happened? and oh my goodness, I missed that other big bull run. Do you see what I'm saying there? It's like, don't be afraid of anything in the markets. And so and we're talking about that now. This is a monthly chart, right? This is basically 30 days of action in the markets. And if you go back to the daily chart, yeah, you may get some big red down candles or maybe a couple of big red down candles. But guess what? It's if you're thinking the market's going to crash, a crash in your mind thinking 50% in one day or 20% in one day. Now that can happen. There's a black swan event there. But do you know there's things right now in the market called circuit breakers? So for example, if the market is down 7%, the circuit breakers will come in and kick it off for a while. And then I'll come back on. And if it continues to sell off, I recognized this back in 2008. When the futures were down 7% one day, the circuit breakers kicked in and shut down the whole market because everything was just going haywire. The circuit breakers will kick in, right, and hold it. So that's on a technical term. Now, on the flip side of that is that the market goes through cycles, right? So the circuit breakers come in on one day, but over, say, a couple of year period, guess what? We're likely to see a downturn, right? 2008 was 2008. It's not as you can see, right? If I go back to these periods through here, and if I go back to my monthly chart through here, okay, as you can see, right, the downturn, if you're going to call it recessions, whatever you want to call them, downturn crashes, whatever you want to call them, they take time. This top here took roughly 12 to 18 months to form. This top here took roughly 1 year to form. This top here potentially is actually taking a lot longer to form. Do you see what I'm saying there? And guess what? Then we had 2 to 3 years of downward movement. Then we had 2 to 3 years of downward movement through there, right? So when you're thinking crash, it takes many years for that thing to completely unfold in front of your eyes. 2008 was what? 2008. In fact, it actually started in the middle of 2007. That's when the top formed. In the middle of 2007. And it was the middle of 2009 that the bottom came in, or roughly towards the start of 2009, that the bottom came in. That's what? Probably a couple of years. 2 to 3 years. This one happened 2 to 3 years. And this one happened roughly around 2 years. So this may be 1 year, maybe 1 to 2 years, maybe 1.5 years on this big downturn that we start to get this here. But guys, it's what? That's 1.5 years. That's more than 400 days in my calculations. I can't do maths. Where's my calculator? Do you see what I'm saying? So don't be afraid of this. But on the flip side, don't think that the market, that when the market has these selling off periods, that the plunge protection is going to come in. It's like, no, it's the sellers and buyers. Okay, the government's not going to come in on every single day and hold this market up higher. If you're thinking that, it sounds like you're hoping that that's going to happen. Look at the facts for what it really is. Okay. Welcome to your Monday Motivation. I said it was going to be a quick video, but it's not. Okay, so that's what I'm looking at there right now. And on the flip side of that, guys, what I said before, if I bring up the SPY, look at this here. Okay, look at this here. Now I'm going to go back to the second thing I was going to talk about, which is volume analysis. Volume analysis is really key. Let me bring up this chart through here. I want to bring up this chart here for a minute, and I'm just going to bring up this here. Okay, now one thing I want to share with you is this. I'm looking at the SPY right now, but it's the same thing, right? Look at this here. Notice this here. When you start to use market analysis, like gauging what the bars are telling you in collective, not one bar. Oh, the plunge protection team came in today. No. Look at the facts, all right? Don't take my word for it. Look at the market. So it's when you take what's happening with the market and volume analysis, it gives you an insight with what's going on. What I mean by that is this. If you know, right, if you've been watching my videos for the last few months, you'll know that I said when the market starts to go up slowly like this, that alone tells me that we're likely to see a reversal, right? You go back and watch my videos on YouTube, you can see that. I actually called this reversal, and I didn't know how much it was going to reverse. No one knows, but I knew it was going to likely to reverse. I didn't know when, but there we go. But on the flip side of that, look at this low volume through here. So see, this is my 260. I use a 260-day moving average. Why? Because there's roughly 260 days in a whole entire year. So I know if it's below the yearly average, and if it's above the yearly average, right? So notice this here. Notice how we do, right? Small bars, not really big, strong up bars. There's very weak upward movement, not really much going on. Low volume. Then what happens? Bam! Came out of this nice big sort of. This was a much more solid down bar, and then guess what happened? Bam! There we go for there, right? We have a nice red volume spike there. What was that? Bam! The start of the downward movement. Now we've been going sideways for a while. Look what happened here. Small bars, not much going on. Low volume. Oh, bam! There we go, right? Big volume spike. What's likely to follow? Bam! Now, guys, I had someone on my YouTube video last week. They're like, John, I'm going to put all my money on the trade, then I'm going to sue your ass. Bring it on, bitch. Because there's no guarantees of making money in the markets. You guys know that, right? There's no guarantees of that happening. It's all about probability, okay? So, by the way, I just saw the number 1111 in my recording. I'm not sure what that means, but anyway. So, anyway, guys, I hope this helped you out. Volume analysis and using that in conjunction of what the market is doing can give you, this is not a long-term thing, guys. This is a short-term thing. I use this in my trading all the time to give me a gauge when the market, because remember, volume is a lot of activity. And when you use volume in conjunction of bar analysis, it gives you a good insight to what's going on. Now, what do I mean by that? Let's just say, for example, if I had a small little doji day, but then we had a big volume spike here, what does that mean? Nothing, right? The buyers, there was a lot of volume that day on this doji day here, but guess what? There was what? The buyers and sellers are fighting it out. It doesn't mean anything, right? Yes, there was a lot of volume, but there was a lot of buyers, a lot of sellers. The bar was telling you, the volume was telling you there's a lot of buyers and sellers in that day, and the bar was telling you that they're fighting it out. What happens if the market did this? Ran up, came back down, and closed there. And we had a big volume spike in this day. What does that mean? Nothing. Right? Absolutely nothing. But what happens if that happens? Or what happens if we get a bar that opens here, has a little rundown, has a nice big up day through there, and we get a very big volume spike? What does that mean? Now there's the bar analysis, because it opened low and closed high, and we get a big volume spike, telling you what? There's a lot of people, a lot of buyers coming in on that day, which is what? Which is now telling us we're now likely to see a move in that direction. Now that move could last maybe 2 to 5 days if you're looking at a daily chart. Makes sense? And so on and so forth. I'll give you a really good example here. Let's go to the SIL. And I'll give you a real good example here of what I'm talking about. So if we look at the SIL, look at this back here, right? So if I bring up, let's bring up, a 3-month chart here. All right, so look at this here. What do we have here on the SIL? Market has a nice move up, and look at this here. Right? What does that do? Do is like small bars, right? So the market's coming up, and we've had this nice sort of pullback. We had a very nice move up and a nice sort of pullback. See how these are very small bars? They're not very strong bars, right? In conjunction of what? See all this low volume through here? See how the volume is just quite low. We have this period of a nice weak pullback through here, not very strong bars, conjunction with low volume. Now, what that low volume is what telling us? Nothing really much going on, right? There's not a lot of buyers, not a lot of sellers, and there's very small bars. There's not very big strong bars like opening, closing, and opposite thirds. All that sort of stuff, right? So the market's telling you that there's really not much going on through here. But then guess what happens? If I open up my chart a bit more, and then I do this. Let me go to the next day. Then guess what happens? Bam! Come on, chart, do this one. Come on. There we go, right? Bam! Look at that. Bam! All right, let me bring up the let me bring up. Right, I'll bring up the SILJ as another example, right? You can see what I'm saying through here. So what do we have here? Nice move down, nice sideways movement. Same with the SILJ. I just thought that this was a better example, right? We have low volume. See how the volume's pretty low through here? Now it's still above my moving average, but that's still how it's pretty low. And look at these small bars, not really much going on. And look at that there. See how it's this bar through here is much stronger. It's much more of a breakout bar. It's much more of a movement in a direction bar, open low and closing high. It's very strong after all these sideways movement. Sideways movement, small bars, not much going on, low volume, not much going on, not much going on, not much going on, low volume. Bam, we had a little breakout bar with a lot of volume. What is that telling you? There's a lot of buyers coming in. Now, that lot of buyers is now telling them we're now likely to see a move in that direction. Again, that could last anywhere between 2 and 5 days in that movement. And as you can see, this actually lasted 1, 2, 3, 4, 5, pretty much 5 days before we actually started to lose momentum in that direction. Now, as you can see, right, this is what we call trading skills. Trading is about getting in at a certain time, maximizing the move, getting out, saying thank you. Now, again, that doesn't look like much, but if you're trading options, that's anywhere between probably 70 to 100% return within 2 to 3 days. No, within 3 or 4 days, you probably pick up between a 70 and 100% return because of the volatility and so on and so forth, depending on the type of option you pick as well too. But on the low end, probably 70% return in a couple of days, 2 days. So do you see what I'm saying there? And so that's what I want to share with you today, guys, in this video. And I hope you can see that when you start to look at the market for what it really is. And as you can see, these are simple but powerful analysis. Simple but powerful analysis that really help you out, in the markets and the way that you trade and the way that you look at things and the way that you study things. And as you can see, right, once you start to remove all this other crap from your charts, the stochastics and stuff like that. Now, you may love the stochastics. I used to love the stochastics. You may love the RSI. I used to love the RSI. You may love the Bollinger Bands. I used to love the Bollinger Bands. You may love the MACD. You may think the MACD is the holy grail. I used to love the MACD. But one thing I came to realize more and more, the most important indicator on the chart is the chart itself. When you start to analyze what I'm talking about here, right? The collection of bars, are they small, are they not? And then you start to put that in conjunction with the volume, as I'm talking about today. Small bars, small volume, small bars, small volume, breakaway bar, big volume. And I'll give you, actually, you know what? Let me just share with you a few trades that I've taken over. Let me see if I can bring this up here. Let me I'm just going to bring this up. I'm going to show you a few trades that I've taken in the past. I'm just going to share with you exactly how this works in the real world when it comes to small bars, small volume, breakaway bar, and especially when you start the conjunction, just simple analysis, right? Nice little run up, pull back, and so on and so forth. So, all right. So let me just share with you some trades that happened just recently. Here's one trade through here. And what I'm trying to share with you guys is basically analysis, right? Volume analysis and bar analysis, right? So see we had this sort of upward movement, and this is looking at PEE just recently. So you'll be able to check this out on the chart recently. This was back in just July, last month, as I'm doing this recording. Excuse me. But as you can see, right, what do we have here? We pretty much had like maybe a couple of months, pretty much almost a couple of months of sideways movement. Not really much going on. Notice how we had all these small little bars, and look at that small volume. Then we had this, I noticed support resistance levels, yada, yada, yada. And then we had this very strong bar. It didn't open and close in opposite thirds, but it opened, it ran up, and then the sellers came right back down and closed it there with big volume. What does that mean? That tells me we're now likely to see a move. Now, I didn't know how much the move was going to be, but as you can see, to the right is what the chart looked like as of that time. Now, obviously, I used a lot of L analysis, guys. Please, when I talk about this sort of stuff of trades and so on and so forth, guys, there is no holy grail system, okay? If you trade something like this, you are going to have losing trades. There is a percentage of trades you're going to take that are going to be losing trade no matter what. And the trade you're about to take today may be a losing trade. Be smart about the way you're trading. Most people say, oh, I had a losing trade. This system sucks. No, that's not how the markets work. That's not how trading works. It's a win-loss ratio. It's okay to have losing trades, okay? But as long as when you have losing trades, you protect your account. When you have profitable trades, that's when you can grow your account. But this is where you can see it actually that was where that's where the entry was, and as you can see, then the very next day came down to almost pretty much the 38.50 level, which was bang smack on this support level here, as you can see there, right? Let me share with you another example here. What do we got here? All right, here's another example. Beautiful, beautiful, beautiful example here. Now, what do we have through here? This is just another recent example here of a trade that happened, right? As you can see, right? What do we have here? This is ADM. Go check it for yourself. You'll be able to see this. Do your analysis. What do you see on my chart here? Just what? Just volume analysis and just one moving average, okay? Now, what do we have through here? We have pretty much a nice downward trend, right? We've had the last couple of months pretty much been down. We had all this, but forget the downward movement. What do we have through here? We had all this pullback here. Small bars, small volume. We had a couple of large volume through here, didn't we? But what was the bar saying? Open and closing very closely. Open and closing very closely. What does that mean? Buyers and sellers are fighting out. Buyers and sellers are fighting out. And then bam, came just down. Open there, close there. Pretty solid down bar, breaking out of this support level with this overall downward trend. And we had a very big what? A very big volume spike. What happened 2 days later? Bam, bam. Nice. Thank you very much. Now excuse me. What I'm talking about here, guys, is what? Trading. This is trading the market. This is not investing in the markets. Investing is you're buying something, you don't give a shit what happens for the next 2 years. You're just going to buy and hold it, right? Something like people, like I'm doing right now with gold. And even the indices right now, I'm in some long-term indice positions. Hint, hint, wink, wink, nudge, nudge. What do you think I'm going to happen? What do you think I'm long or do you think I'm long in the indices right now? Like the SPY or the Dow Jones? It's actually a Dow Jones position. Do you think I'm long the Dow Jones right now? Long-term investing position, or do you think I'm short right now? But as you can see, right, this is called trading. Trading the markets like finding really good opportunities. Let me share with you some other examples. You know, people say, "Oh, John, that's just recent examples," but you know, it doesn't happen all the time, and it doesn't work all the time. I'm just like, yeah, like no matter what you look at, right? So let me just bring up some. I'm going to bring up some examples of that happened a couple of years ago now. Here we go. All right. Here we go. All right. So let's look at this one here. Look at this here, right? What do we have here? All these small little bars, breakaway bar, movement up. Let me bring up this one here, SQ. All right, I'm just sharing with you just recent examples here, okay? So look at this, not recent, no, this was back in 2017, right? Look at this here. Small bars, not much going on. We had this breakaway bar, we had an increase in volume here, and the market ran up sideways, breakaway bar. Oh, didn't really do much, did it? Oh, cool. Oh, John, that sucks. It didn't do much the second time. Why not? I don't know. I think some of them stop out. Some of them make a profit. Some of them do nothing. That's just trading. So anyway, the whole purpose of this here, guys, is not to say this is the holy grail system and you should trade it and blah blah blah. And I'm not saying this is all the rules I use, by the way. I make sure I'm looking at that higher time frame for analysis. Okay, this system is what I'm teaching right now is what. Not perfect, right? And it comes down to the way that you trade the market, not the market itself. Because you can have the most brilliant system on the planet. But if you're not consistent with that system, if you're not disciplined to only taking that system and patient as long as you have to wait for those trades to form on the charts with that system, you are never going to make any money from any system on the planet. So it's up to you to do really, really, really well. So, first thing we talked about in this video for a Monday motivation to get you excited for this week. Firstly, Plunge Protection Team will not stop the next recession over the next few years. That's the first thing look at the facts for what it really says. The second thing I talked about was volume analysis. How they're using the conjunction of the bar analysis, small bars, low volume, breakaway bar, good volume, is telling you, it gives you a gauge of what's likely to happen maybe potentially over the next 2 to 5 days. You can never know what's going to happen, but using this stuff gives you a really, really, really good high probability. And then I'll walk through just recent examples of trades. I use that within my own trading to share with you exactly how I use that within my own trading. I hope this helped you out, guys. You know, this trading really, really, really you can do really well out of trading. But if you don't do what I just said a minute ago, I can give you a system that is 100% success rate. All right, I can give you a system 100% success rate. Would you like that? What if I only told you there was only 6 trades per year? That's not much. Well, you can't have the cake and eat it too. If you want a lot of trades generally equals what? 1, a lower win-loss ratio, meaning you're going to have more losing trades than not. So no, more losing trades than if you were trading like a high success win-loss ratio. The higher the win-loss ratio with the system, like I have a 90% success rate, and I don't have a lot of trades throughout the entire year, but that's okay. There's not a lot of trades there, right? But if you have a lot of trades throughout the entire year, then guess what? You're going to have a lower win-loss ratio. That means you may have a lot of trades, and you may only have a 60% win-loss ratio. That means you must be comfortable having 2, 3, maybe even 4 losing trades in a row, and it be normal. Oh, this system sucks. I just had a losing trade. No. Do you know what I mean? Like, look at the market for what it really is. Stop trying to get rich and all this sort of stuff and put whale of positions on to try to make a lot of money in one market and all that sort of stuff. It's just not the way to go with these markets here. And at the end of the day, it's never the market that gets you. Let me say that one more time. It's never the market that gets you. It's you that gets you. It's not the market manipulation. It's not the plunge protection team. It's you. It's you trying to make a quick buck, right? It's you not having a system that has that you understand the win-loss ratio, and you being consistent at trading that system, disciplined to only trade that system, and patient for that system, patient waiting for that system. Okay? So if you want to be part of this trading world, and if you want to become good at trading, you must abide by the laws of what a successful trader is all about. He has a plan. A plan simply means he knows what he's looking for on the charts. Then he's consistent every day. He shows up. He does his scans. He's disciplined. He's only taking those trades. And he's patient. If he has to wait a week or a month, that's what he does. That's what a successful trader does. It's not he knows what's going to happen tomorrow and he knows what's going to happen 2 weeks from now, all that sort of stuff. It's like, no, I've never met anyone any of my 7-figure mentors that do this. I'm telling you right now, that's the thing. So if you are not doing well, I guarantee you, because of those 4 things. 1, you don't have a plan. You just, the plunge protection is going to come in today, so I'm going to buy this. Lucky. And 1, you don't have a plan. And secondly, you're not consistent, disciplined, and patient with that plan. So I started with this video saying that this is going to be a quick video, but there you go. This is a bit of a motivation, guys. I come from a humble place with you guys right now because I have made so many mistakes in these markets. I've lost so much money during the period of time. I was $250,000 in the hole at one time when I first started, my first 2 years, because I had no idea about these markets, and I've had to learn the hard way. I've had sleepless nights in these markets trying to get ahead in these markets, and then I go through, and I trade that way, right? I say this because I'm trying to neutralize your position. That I'm not talking down at you. I'm talking with you. I'm trying to help you here, because and what would happen, right? I may have a $10,000 trading account, and then guess what? By the end of that year, I've actually blown that up two times. I blew that $10,000 trading account up, and then had another $5,000. And I said to myself, if I was only at break even, I'd be happy, right? I'd still have that money there. And then the next year came, and I did the same thing. I'm like, man, if I was only at break even, if I only had the money there, etc., etc. And then I started to realize, what was I doing to cause these losing trades? I'm trading like a maniac right now. Trading with all these emotions. I have a $10,000 trading account, and I'm whacking 50% of that in one trade, trying to make money and trying to make a real big profit on this one trade. When that's not what trading the markets is all about. Trading the market is, oh, look, I took a trade and it only gave me a 30% return with options. Oh, okay, well, that's all the market's going to give me today or over the next couple of days. Thank you very much. I made a profit. Oh, look, I had a 20% loss today. Okay, cool. I protected myself. I only had small risk. I only had 20% loss. That's not 20% loss on the account. It's 20% loss on the position. Probably 2% loss on the account. Oh, look, I had 100% profit today. Fantastic. You know what I mean? Like, that's trading the markets. Trading the markets is, or with those positions, right? And then I started to realize that there was a lot of fundamental flaws. If I wanted to get ahead in the markets, that there was these fundamental flaws that I was doing that was bringing to the markets that was actually stopping me from truly crushing it and doing well in the markets. And it was from that process and from me going year after year after year and doing the same damn shit over and over again, expecting a different result. I said, I need to get real with myself. If I want to do well from this thing, I got to start to smarten up. And it's coming from that place there to say that success in the markets long term is never about getting lucky on 1 or 2 trades. You may make $1 million on one trade right now. You may have a whale of a position in silver and gold right now as we speak. But let's say you make $1 million over the next 2 years. $1 million. Because you just put it all in the silver and gold because you think it's going to go up. And guess what? You got it right. You made $1 million. Guess what? You're a millionaire right now. The government takes 50% of that. Your wife takes the other 50%. You're left with maybe 100 grand. But let me ask you a question. How do you replicate that for the next 10 years? You can't, can you? Oh, but John, I've made $1 million. Who cares? No, that's where you have it wrong. Because I guarantee you, you thought you did it once and now you think you can do it again. So now you're going to put that whole $1 million, because now you owe taxes, right? We thought, oh, well, I'm just going to put that money into the market to make more money. Then I'll pay my taxes. And then guess what happens? Bam, that whole position gets down to zero because you get into it and you watch it day after day, week after week, month after month, and it's going against you and you're pulling back and you're using all the different, you bring out the RSI, the stochastics, you bring up the 452-day moving average, and you bring up support lines to try to, well, it's got to come back right now, and you try to look for videos on YouTube and reports to support your claim to what you're looking at is definitely going to happen, and that's going to give you some sort of hope that this thing's going to turn around on you, and then by the time you get out, it is all over. It's not about making a large amount of money on one trade and that's it. No, build the skills to do really well for the rest of your life. And that way you'll never have to starve ever, ever, ever again. Hey traders, thanks for watching my YouTube video. You know that there's a lot of areas in the trading arena, right? For you to become a good trader, right? There's the trading systems, there's the chart reading strategies, there's the foundations, the mindset, and there's so many areas, right, you need to really understand in order for you to become a good trader. So that's what I've created, the Master Trader Lab. I put everything in there for you to become a really, really good trader, and I'm giving you a free trial. So if you go to mastertraderlab.com and you can grab a free trial to this and start learning the chart reading strategies, the trading systems, the mindset, so much more in there, and start to learn the skills to become what I call a master trader. So go to mastertraderlab.com.